Have you ever felt like the stock market is some kind of secret club, speaking a language you were never taught? Well, today we are going to pull back the curtain on one of the most powerful and, believe it or not, one of the simplest investing ideas out there. And we're going to do it with a little wisdom from one of the greatest investors who ever lived.
I mean, let's be real. For most of us, the whole world of investing can feel like this giant, confusing maze. It just seems so complicated and maybe even a little bit intimidating, right?
Do you know that feeling like it's a members-only club filled with all this jargon and high-stakes gambling, and you feel like you need a PhD in finance just to open the door? If you've ever felt that way, trust me, you are in very, very good company.
But what if I told you that the legendary investor Warren Buffett, the Oracle of Omaha himself, thinks that for most people, the winning strategy is shockingly simple. For decades, he's been saying you don't need to be a Wall Street wizard to build wealth. In fact, he says that by keeping it simple, you can actually do better. How wild is that?
So, what is this big secret, this powerful, simple strategy? It's not some crazy algorithm or a hot stock tip from a guy who knows a guy. Nope, it's way more straightforward. So let's dive in and break down the core of Buffett's advice.
The whole thing is built around this one idea, an index fund. And don't let the name scare you. All it is basically a pre-made basket that holds tiny little pieces of hundreds of different companies. So instead of trying to find that one needle in a haystack, that one superstar stock, you just buy the whole haystack. And this really shows you the two different schools of thought. On one side, you've got active investing. That's where some fund manager is trying to be a hero, picking and choosing stocks to try and beat the market. It's super hard to do, and they charge you really high fees for trying. But on the other side is what Buffett recommends for most of us, passive investing. Here, the goal isn't to beat the market, it's just to match it. And the most beautiful part, the costs are incredibly, incredibly low.
And Buffett just nails it right here. Why does this work so well? It's not magic. He says it right there. It's just math. Simple math. When you pay less in fees, more of your money gets to stay in your pocket working for you. Over years and years, that tiny difference adds up to a huge advantage.
And just how low are the fees we're talking about? Well, a typical S&P 500 index fund can have fees as low as 0.04%. To put that in perspective, for every $1,000 you invest, you're paying just 40 cents a year. Now compare that to an active fund that might charge 1%, which is $10, 40 cents versus $10. Over a lifetime, that difference is absolutely massive.
Okay, so if we're going to buy a basket of stocks, which basket is the one to get? Well, Buffett's go-to recommendation is the one that tracks the S&P 500. So, let's get properly introduced to this absolute heavyweight of the market.
Now, this is why the S&P 500 is such a big deal. It's basically a list of 500 of the biggest, most influential companies in the U.S. And get this, together, they represent over 80% of the entire U.S. stock market's value. So when you invest in an S&P 500 index fund, you're not just betting on one company. You're owning a broad slice of the whole American economy.
And what kind of companies are in this basket? Oh, just a few small startups you've probably never heard of, like Apple, Microsoft, Amazon, Google. Even Buffett's own company, Berkshire Hathaway, is in there. It's literally a who's who of the brands that we use and see every single day.
Okay, quick timeout. Super important, friendly reminder. We're having a lot of fun exploring these ideas, but this is all just for educational purposes. This is absolutely not investment advice. We're not telling you to buy or sell anything. We're just nerding out on the concepts together. All right? Cool.
All right, with that important note out of the way, let's get back to it. So hypothetically speaking, how would a person even do this in the real world? Let's walk through a super simplified high-level path.
It really just boils down to 4 pretty simple steps. 1, you'd open an account at a brokerage firm you trust. 2, you'd find a low-cost S&P 500 index fund or an ETF, which is kind of like its cousin. 3, you decide how much you want to put in. And 4, and listen up, because this is maybe the most important and the hardest part, you stay the course. This isn't about timing the market, it's about consistency and holding on for the long term.
Okay, so we've talked about being simple and patient. But what's the reward for that? This is where we get to the really exciting part. This is the wow factor.
Of course, the market has its scary moments. It goes up, it goes down, it can feel like a roller coaster. But look what happens when you zoom out. When you look at the big picture over decades, the historical trend has been powerfully, undeniably upward. It shows that time in the market has been way more important than trying to time the market.
So what does that look like in numbers?
Well, over the last half-century or so, the historical average annual return for the S&P 500 has been around 10%. Now, I have to be crystal clear here. That is just an average. Some years are way up, some years are down, and it is absolutely critical to remember that what happened in the past is no guarantee of what will happen in the future. But it does show the incredible power and growth of the U.S. economy over time.
And what could an average like that do for you? Well, this is where you meet the true superstar of investing, compound interest. That's when your earnings start to earn their own earnings. It's like a snowball rolling downhill, getting bigger and bigger all by itself. Your money works for you, and then the money that money made also starts working for you. And that force, when combined with consistent investing over a long time, has shown the potential to grow into a truly life-changing amount of money.
Okay, so after all of that, if you remember just one single thing from our chat today, what should it be?
It's this, right here. You do not have to be an expert stock picker or a Wall Street genius to build long-term wealth. Just like Warren Buffett has been telling us for years, for most people, a simple, disciplined, low-cost approach can be the most powerful path there is.
And we'll end on this final and most important thought. Thanks so much for hanging out for this explainer, but please remember, this was not financial advice. Your financial journey is completely your own, and making smart decisions always starts with doing your own research, and maybe even talking with a qualified professional. Thanks for watching.